Yes, yo. Hello, guys. This is David Capable in the building. I want to be putting you through something that is going to wow you. This particular tool is going to sharpen your technical analysis of your forex market. Okay? It's an all-encompassing tool because it combines the trend line and also the support and resistance zone. It's a very powerful tool. This tool is none other than the Fibonacci tool. Now, this Fibonacci tool has actually been used to spot support and resistance zone and also to help traders to spot where they can place a buy and where they can actually also place a sell. Okay? Now, I want to take you just through a brief history about this tool and how you can actually apply it in the your forex chart to make your analysis. So let's look at a brief history about it. Now, the Fibonacci tool was actually invented by Leonard Fibonacci. He actually invented it. He is a popular Italian mathematician. He actually invented it for mathematical purpose. And when he actually invented this tool was actually used in the form of what is called Fibonacci sequence. Now, for arithmetic progressional purpose, the arithmetic progressional purpose was what the Fibonacci sequence was used for, where you have two previous numbers added to get the current one. Now we have a case of 1 plus 1 to give 2, 1 plus 2 to give 3, and 2 plus 3 to give 5, and 3 plus 5 to give 8. Now this was what the tool was actually used for. But as time evolved, it was actually now developed and used for forex analysis as Fibonacci tool. The Fibonacci tool is made up of Fibonacci extension and Fibonacci retracement. They are all one. They are all one. They all serve the same purpose. Okay? They are all classified as Fibonacci tool. Whichever way you want to make use of it. Okay? So let's look at what traders use this tool for. Now, traders use the Fibonacci tool to find retracement levels. These retracement levels in your forex chart serve as potential support and resistance areas. There are support and resistance areas in a chart now, but you need to find them through retracement. Okay, now this retracement shows you like the various swing high and low areas. Okay, now when there are swing highs and swing lows areas, you can actually see clearly where the market is heading to using this particular tool. Okay, now remember, there is no static way charts are in the forex chart. It already go up, come down, goes up, come down, like this kind of movement. Okay, when you see this kind of movement, there is also what is called the retracement. Now this retracement means where the market will come down to before it picks up, or where the market will hit up before it comes down. So this tool helps you to find this particular area, and by so doing, it tends to clearly show you where the support and resistance area is, and you can actually place a buy in your support zone and actually place a sell in your resistance zone. Now, traders actually make use of also the Fibonacci extension to find profit taking levels. Like I've earlier told you that this tool helps you to find profit zones. If you are entering at a support zone, it means you are to take your profit in the next resistance zone. Okay, then if you are entering actually at a resistance zone, it means you have to take your profit in the next support zone. Remember, you place a buy at a support zone, then you place a sell at a resistance zone. Okay, it's a very important tool, very important tool. Now this tool is mostly used in a trending market. Please, the best way you can actually make use of this tool is in a trending market. You may ask yourself, what is a trending market? A trending market is where the market is either going up or the price is actually moving down. When the price movement, the chart is going up, we say it has a bullish movement. When it's going down, we say is that a bearish movement. Now the Fibonacci tool is best used during these cases when either the market is going up or down. That is the best way, the best form you can actually make use of the Fibonacci tool, because it will clearly state these particular zones for you. Now this particular tool, it marks it using what? Sequential numbers. That is sequential number that this particular Fibonacci tool comes with. This sequential numbers clearly states where the support and resistance is, okay, as the market is going trendy. Okay, it's very simple. Now the idea of using this particular tool is to buy on a retracement at a Fibonacci support level, okay, when the market is trending up, and to go short or place a sell on a retracement at a Fibonacci resistance level when the market is trending down. Now it's very simple. What this is trying to tell you is that when the market is trending down and you draw your Fibonacci tool, the Fibonacci tool will tell you where to place a sell. When it's trending down, it's going down, it means that the Fibonacci tool will find a retracement area where it will go up a bit, it will retrace a bit up before it has continue the down movement. Now when it retraces up a bit, you can place a sell order at that point, and it goes down again. Then you start taking your profit downward. Same also happens when it's actually trending up. When it's trending up, what happens? You'll be looking at where the Fibonacci retracement is marking for support zone. Those support zone it marked for you. Those support zone is marked for you when the market is going up are the actual area where you are going to place your buy order. Okay, when the market retraces to those zones, the support zones in the Fibonacci tool where it has marked for you, in that support zone, you are going to place your buy order so that you can take profit in the next point that is going up. It's very simple. Now, like I said, the chart actually encompass what? The Fibonacci retracement and what? Fibonacci what? Extension. It's also a software that actually combine the both, so you don't need to bother yourself. Okay, it shows you, it combines both the retracement and the extension all put into one, so you don't need to bother yourself. Now, while the Fibonacci tool is actually drawn across the chart, you will discover that it comes out with 100, 61, 50, 38, and 23. These are zones. It's trying to tell you that these are zones. These are zones. These are particular important zones the market is going to be moving to. Okay? The movement of the market is going to be touching. These are zones the market will be touching. So, but if you are looking at it, please take note of these particular levels. These are the most key zones used when you are using the Fibonacci tool. The 50, the 61, and the 38, they are the key zones. It will draw it across the chart, but these are the key zones we are going to be looking at. Okay, now let's go and look at how this tool is applied practicable. Okay, so let's look at our practical terms. Okay, we are actually on a MetaTrader 5. Okay, now I'm going to be making use of Australian dollar versus the Canadian dollar. Now, it is actually advisable to use the Fibonacci tool when on a higher time frame. You look at the higher time frame, either H1, H4, or D1. H1 means 1 hour, H4 means 4 hours, while D1 means what? Means 1 day. So here is M1. So I click on that M1. You see all the time frame, then I select H1. This is H1. This is H1 chart, how the H1 charts. So I'm going to be drawing my Fibonacci tool on this H1. Remember, the currency pair here is Australian dollar versus CAD. That's what we are using as our case study. Now, how do I find this particular tool? When you look up the chart, you will see a plus sign, an F sign, and something that looks like a tool. That place, you click it. You click on that tool. Once you click on it, you will see add object. You click on add object. You go down till when you find your Fibonacci retracement. Look at the Fibonacci retracement here. I click on it. Now the tool has already appeared. What am I supposed to do now that it has appeared? I'm going to drag. I will drag it from the highest swing high zone to the lowest swing low zone. Now some cases you hear drag it from the latest or recent swing high to the recent what swing low. Is however you want to draw it, but look at the highest point here. The highest point is 0.916 and the lowest point is what 0.89690. I may decide to drag it to that point, or I will just drag it to the recent low side, which is 0.90490. That is the recent low side. Okay, let's use the recent low side. And I'm dragging the tool like this. If it doesn't appear, you go back, go pick it at retracement, then I'm dragging now. Okay, let me see. You see, I'm dragging to the lowest point, to this particular highest point here. You see it? Did you see how I drag it, right? Now the red line that touches the highest point, which is 0.91610, it touches the highest point, then and the lowest point, which is what 0.89690. Those 2 points, you see a red line that crosses across that place. It's showing you that red line is a trend line. I told you before that these two combined trend line and support and resistance zone. That red line that crosses and touches the toppest point, the highest point to the lowest point, is actually a trend line. It shows you where the market started moving from that lowest point and was going up, was going up till it went to the highest point. Now, each of this area between the highest point to the lowest point, there is something that is marked in between. If you check them, you see like a dotted line. It shows the dotted line 0.0, yes. Then the next dotted line, you see 23.6. You see it has crossed across. Next followed by 38.2. It has crossed across with dotted lines. Then another dotted lines, it has crossed across with 50. Then another dotted line, you see with 61. These are important Fibonacci levels. They are important swing zones. These zones are actually the zone of the support and resistance we are talking about. So now, if you want to place a buy, if the market is actually maybe on an uptrend, where do you have to place your buy? You can start from this where the 0 point is. Then if you place your buy at 0 point, you take your profit at where that 23 point level is. Okay, you take a profit from there. If the market continues an uptrend, you wait for the market to come down. Maybe to come down to that same 23, where it will retrace back to 23. Then it will continue. If it's continuing the uptrend, you take your profit in the next one, which is the 38, at that 38 level. Then if the uptrend continues like that, you take your profit where the Fibonacci is at 50. If it continues, you take your profit where it's at what 60. The same also happens when the market is coming down. If it's coming down from the 100, where the 100 Fibonacci to is what is the highest swing area, where we have that 0.91610. What do? You place a sell order. Or you're placing a sell order, you take your sell order and take your profit at where the 61 Fibonacci tool is. Okay, you can take your profit there. Then if it's keep going down, you take your next profit at where this 50 Fibonacci level is. Then where the Fibonacci level, the next one, which is 38. Okay, the next side is what 29. So these are important levels, depending if the market is actually going up or the market is going down. Remember, the tool is best used on a trendy market, whether up or down trend market. Okay, this is the essence of this video. Okay, I just showed you now there is an uptrend, how this thing moves from the uptrend down to where the 100% Fibonacci tool is, and it's about to start coming down now. If it start coming down, it means it will be targeting the next Fibonacci zone, which is the 61, and keep going like that until it will be retracing across this particular levels. The market moves across these particular levels. These Fibonacci levels are the support and resistance levels. It's very, very important. Okay, so guys, the idea of using this tool is to buy at the Fibonacci retracement level that appears on the support zone when the market is actually trending up. Okay, then the idea is to sell when the Fibonacci tool is actually coming down. When the market is actually trending and it's coming down, you use the Fibonacci to find the retracement area where you can place a sell order. It's just as very simple as that. So this tool combines both the trend line and the support and resistance zone. This is a very important tool, guys. It will help you to find your best entry spot for buy and sell, and where you can actually also place your take profit. Like if you are putting, the market is on an uptrend now, and you get to this zero, what am I targeting? I'll be targeting the next Fibonacci zone, which is 23. That is where I will take my profit. If it continues, I will take my profit at the 33 Fibonacci level. This is very simple. So if this video has been very helpful to you, please do not hesitate from clicking your like button, share and subscribe. I'll keep dishing out very educative videos to you guys. Please guys, I need your support, because I need this forex to be simplified to everybody out there, even to a common man. The Fibonacci tool is a very powerful tool. It helps you combine your trend line and your support and resistance together. If you don't even know how to draw support and resistance, with this you will be able to spot where the support and resistance is, and you also see how you can actually draw your trend line. Very simple, and you can actually use it to spot your buy and sell zone and where you can take profit. Thank you guys. I still remain your boy, David Capable. One love.